Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having an amazing day. We're taking a look here at Bitcoin, seeing what's going on. It is breaking down as we expected, but also got a lot quicker than anticipated, right? So it just had this massive shelf as soon as we lost this ascending trend. It's been downtrending ever since. So I'm glad that we closed our positions as a community here, but unfortunately, couldn't catch those short positions. So congrats to those who did. Very well done on that. Now, what we want to look at here is potential long situation here, if there's any potential here to take a long at this dip, or if it's going to continue to run. We're going to take a look at previous month and week closes here as well. That's what this red and orange lines are for, just to kind of give us perspective on where we ended the month last month and where we could end the month this month. If we do effectively close right now, right where the price is at, we should be in good shape to see a bounce, at least to the very least, back up to the 27, 28 range. We'll talk about that, of course, and much more. So if you're new to the channel, I'm not a financial advisor. I hope you can learn something here today. If you want to become a better trader, cryptocash.tech is a site, link down below, where you can learn how to just become a better trader. We got some awesome community members over there, and just very thankful for being part of your lives. Thanks again so much for just being part of that. We've also got some new members coming on over here recently as well, so congrats to them. Also on taking some nice healthy profits here recently. Once again, we took a good 54% from Bitcoin, and of course, nice 29% there from Ethereum. Also 37% in 3 days from Bitcoin as well. So we had a couple of Bitcoin trades that went very well recently. So we're looking for our next potential long or short. And what we want to talk about here is what that might look like. So let's go ahead and jump into the back-end data first so you can kind of see roughly where we're at. And then we can kind of go from there. So when it comes to liquidation, it's pretty obvious. I think we already probably know. Shorts ruled the roost here recently, right? So they took out a lot of long positions, so the price action is coming down. We can see here that the overall consensus here, this is an aggregate bid-ask spread ratio. We're seeing a lot more folks wanting to sell than buy right now. Okay, so that's a pretty common characteristic when the price is coming down like this. We can also see a lot of longs have closed out. This isn't necessarily a bad thing. It just tells us that longs are not really trying to take positions right now. That's where you probably want to wait for confirmation at this level. See what the monthly candlestick close is going to tell us first. Take a look here as well for the shorts. We can see more shorts were opened yesterday. And of course, again, a little bit more here today than closed. So overall, we can still see that the general idea is that the price is coming down and folks are kind of on board with that. Take a look at longs here. Let's go ahead and see where we're at. We had some longs liquidated pretty hard here, right here at the 27.4 mark. That was a previous support level. Dropping down below, we got some late longs coming in here, of course, in the last few minutes, honestly. Just really recent data there. When it comes to shorts, though, we can see shorts are equally in a very similar situation here. We don't have a ton of late shorts here coming in. They're kind of just hanging out. So while we do have more shorts in general than longs, there's not a lot of late shorts, which tells us that they're waiting for this, potentially that monthly candlestick to close, or just in general, waiting for a little bit more confirmation before taking more shorts. Okay, so what does that mean for us? Well, let's go ahead and talk about that here first of all. Just to clarify, on the monthly, with this line here that we have, this red line, I do this out because it kind of just helps us get perspective on previous monthly close. So we'll take a look at that here in a shorter time frame, but to touch on the monthly time frame, what we can see here is that we're still above 50 on the RSI, which is positive. So hypothetically, we don't drop below 25,000. We really should be able to maintain that level. So that's a good sign. We can also see we're still converging, but not as strong as previous. So had we closed closer to 30,000, we'd probably see that trying to converge at this point. We're still a few months away from really understanding what that means for us. But generally speaking, at this point, we want to kind of be respectful of the fact that the monthly candlestick should close where it's at, but we gotta understand that there might be potential for anything lower. What I want to take a quick look at here would be our moving averages as well. Once again, the 50-day SMA, right there trending about 25,000. Most moving averages are hovering right around that 25,000, the larger time moving averages, and we're seeing that kind of consistent. So not saying that the price will necessarily hit that level, but again, 25,000 should be a point of contention. If it comes down to that level, we should see the price action effectively be able to bounce off that. Okay, so let's go ahead and take a look at the weekly now and just kind of see here. That's what this other line here is, of course, the previous weekly close. And we can kind of see that we're above all moving averages. So we're not in terrible shape here. We're still over 50 on the RSI, but we're starting to see a divergence on the monthly MACD. So keep in mind, monthly MACD isn't 100% accurate, but anytime we've diverged in the past, we've seen some pretty significant divergences. Okay, so I'm not saying that you should sell everything and just call it quits here, but for lack of better terms, we could see that pushing us down to the 25K mark. just because of that, but we are still holding above 50 on the RSI. And of course, we're above all three moving averages. Keep in mind the 200-day SMA on the weekly is right there about 26.4. Okay, so that's giving us some good confirmation, letting us know that we still have some good support ranges where we're at right now. Okay, so again, not dire straits by any stretch. Okay, so let's talk about the daily here and work our way down. We can obviously see that we are below 50 on the RSI. This is disadvantageous in most cases. It pretty much tells us that we're fairly bearish for the moment. We can also see that we're starting to diverge as well on the MACD here. It doesn't necessarily mean that we're just going to just drop like a rock, but it's something we want to pay attention to, right? We can also address here the simple fact that we are above all, well, the important moving average here at about the 200, that's trailing way behind. But we got rejected by the 50-day SMA pretty hard. Okay, so if you can kind of see this, I know there's a lot of colors going on the screen. Just remove this for the moment. You can go ahead and see, of course, that the SMA 50 is working its way down, and that's going to be a potential resistance, whereas the 20 is trying to maintain the current price right there at about 27,000. So my speculation, if we get a closure at 27,000 or higher today, we should be in decent shape to see a potential bounce, at least to try to retest these most recent highs. But once again, a little too early to tell. So that's where you want to wait for a candlestick closure. We got 7.5 hours until this candle closes. So it's important to kind of wait that out if you can. So all in all, that's kind of where we're at here for the moving averages on the daily. So the daily is, I would say, fairly neutral in that sense. We got some positive and some negative, still slightly more negative here, I would say, in the sense that the potential reality here is that the price, we should expect the price to continue lower until it doesn't, just based on the overall trend. Oh, touching on the trend here, let's address this really quick here on the daily as well. We've got this descending type of trend. You can see it here, where we have this type of, it wasn't able to break out like it should have. Okay, so what that really implies that we could very well see the price channel itself down here to potentially break out later. And just a general sense here is that we lost this potential for breaking the descending trend. And that's an important thing, right? Because you got to establish higher lows in order to break through a descending trend. And this is essentially telling us that it's not happening. Okay, but good news is there is an average true range here right at the previous monthly close at about 27,000, where the volume is essentially building a strong profile. Okay, so again, more so conflicting, but just want to address the fact that we are in a descending type of trend still because we weren't able to break free from that. Okay, and that's a really common characteristic, unfortunately. So take a look here at the 4-hour here, and just to clarify, this red line, what this is the previous monthly low. Okay, so this previous monthly low is important to recognize because if we close above that, that does kind of hold us in place as a potential support. Okay, so it's always important to maintain an understanding of previous monthly or weekly closes, and we can see here that that previous monthly close or low essentially is a very important thing to recognize. Okay, so that's a potential support level there. All right, so right there at about 25,800, we can go ahead and see right there. This is the previous weekly close as well. Okay, so we kind of got this little bit of a range here where the price action is kind of is potential support range. Obviously, we want to close above that 27,000 mark, but if we lose that, 25.8 would be the case in point where we could very well see a retest of that level. And that's once again the previous week close or previous week low. Sorry, definitely these are the lowest points where we want to watch out for. Okay, so just some areas to kind of pay attention to. Bottom line here is that the money is flowing way out of this coin here. And anytime you see the money flow index dramatically lower than the RSI, it does typically reverse itself in a lot of ways. Okay, so let's just take an example here of previous time where the RSI was higher than the money flow index. The price inevitably increased from there. Same thing here as well. Price increased from here. Okay, so I'm not saying the price is going to necessarily jump from here, but it would make more sense for the money flow index being so low that the RSI would effectively try to, at the very least, retest this level. Okay, so to me, if we get a candlestick closure at 27,000 today, I think we will see a retest this most recent low, which is roughly the 27,500 to 27.6 range. Okay, so if you're going to take a long, have some tight profit targets, but they would be effectively, somewhere in the range here, right there between 27 and 27.5. Yeah, that's kind of what I'm speculating, but keep in mind we're still diverging. There's not a lot of reasons to take a long into this. There's still more bearish activity, and we just need to recognize that we're in a position right now where we're below the 200-day SMA and the 50 officially. We're pretty much all below all moving averages, so there's no reason to really take a long position into this. Once again, waiting for the candlestick close I think is the most important thing. Taking a look at the 1 hour, we can go ahead and see on the hourly that we are in a situation here where the overextension is occurring. At least, well, we hit a 7 and another 7. So we've really, we're about a pretty decent amount of hours into this continuation of the downside. So while it's not overextending itself completely, it's still pushing pretty low. So hypothetically, in the next couple of hours, we should see this recover, at the very least, to bounce up off this lower Fibonacci retracement level at 0.5 at 27,150. Okay, so we could see a little rally up to there. Hypothetically, the monthly close is good. We can see probably around 27.5 is a potential reality for the next level. Because once again, that level, I'm not just pulling that out of a hat, that is a Fibonacci retracement, but we also saw this previous support range here. A little easier to see without this, so you can kind of see right there. We had a lot of support where the price continued to retest that, so we can expect that to be a resistance now. I'd say 27.6 is probably a better case scenario for a healthy profit target if you're able to get up there for a long. Once again, not telling you to take a long, just saying that if you were to, you'd want to have some nice tighter targets, and that'd probably be the shelf that we're going to see some resistance. Okay, so we're just going to go and extend this out over a little bit further so we can pay attention to that level and kind of see from there. We also want to take a quick peek here at the Ichimoku cloud. We can see all green lights here for a short position. If you have one open, you basically want to leave it open because it's really just telling us that we are due to come down further, or we have more potential. In other words, lagging spans free and clear really just tells us until that intersects, we should keep our short position open. Same thing as well with this conversion line being below the baseline. That tells us we have momentum to the downside. And obviously, we're below the cloud here. So a handful of things and reasons why it's important to be on track here, and to recognize that taking a long right at this very moment may not be a good call. But once again, it really depends on your overall strategy, right? If it's a swing trade and you feel comfortable with holding a position for longer, it may not be a terrible consideration. But once again, there's not a lot of proof here telling us that it's going to turn itself around immediately. We need to consolidate this 27,000 range for a little bit longer before we see that potential leg up. Last thing I want to take a quick look here at is the SVP rather. And what this basically does is it tells us the volume profile of this 1 day worth of trading. So far we can see we've got an average true range in the last 24 hours, or this 1 day candlestick open at about 27,100. So that should provide a resistance level for us, because anytime when price is moving down, it works as a resistance, and you can see the price continuing to work below that level. Okay, so previously, if we see this on ascending trends, it works as a support level in a lot of cases, right? Where the price continues higher from there. But at this point, with the price descending, we have an overall descending trend. Until we can close above that kind of range, just say we get a closure at 27.2 today, that would be a case in point where I feel more confident taking a long, right? Again, a lot of different scenarios here, but the bottom line is that based on average true range, where you can see the price action is moving down, our super trend basically tells us that the price is continuing lower. So until it doesn't, we need to assume it will, right? So that being said, not telling you to necessarily take a short right now, but it would be statistically more beneficial to consider either a short or to hold your short open for the moment until we have confirmation that the price is going to turn around. So to me, confirmation would be coming in a few different ways. First of all, once again, we got the previous monthly low. I would like to see the price close where it's at or higher. So 26,950 or higher would be an important place to close, because once again, we got a decent amount of volume in this range, and we can see that we're kind of holding right there at that volume profile, right? The largest amount of volume we have right now is at 27,000 or 26.9. We lose that, we can expect further downside. If we can hold this here for just say 24 hours, we get a candlestick closure, a monthly candlestick close today at this current level, then we might be in pretty decent shape to see a rally back up. Again, some things to think about. I hope this made sense for you and I didn't lose you at all. Feel free to rewatch and make sure you understand everything. These are all things I teach in my Trading Academy. Oh, also, by the way, too, we've got only a few slots left available for this BINGX thing. There's basically 100 new users that can register, upwards of $10,000 reward. You get a $100 trading bonus for just basically using the exchange. You don't need to trade volume or deposit anything. So it's kind of just free money to kind of see if you can make something happen with it. It's really cool. To keep in mind, there is a slight delay on receiving that bonus. It doesn't happen right away. But this is a good transition from Bybit, because Canadian, European, Oceanic, US, UK members are all benefiting from this because there's no KYC or VPN. There's a small area of Canada that does require VPN, but minus that, it's 100% easy to use and just an awesome exchange. So thank you, BINGX, to being able to provide that to our community members. Really appreciate you. Either way, I thank you so much for your support. Feel free to message me if you have any questions or concerns. Have a great rest of the day. We'll look forward to seeing you in the next video. Take care.